A very good afternoon to one and all. I welcome all of you to the session. On behalf of the Sustainability Reporting Standards Board of I, CA Shelly Bavishi, extend a warm welcome to all of you to the 10th session of our webinar series organized under the theme Steering India's Sustainable Growth. Today's session is centered around a critical topic, Taskforce on Nature-Related Financial Disclosures Guide on asking better questions on nature. We are honored to have with us our esteemed speaker, Mr. R. Aditya Subramaniam ji. He is a bachelor's in accountancy and finance who, for the first time in Mumbai University, scored 100 in cost accountancy. He went on to complete the company's secretaryship course, LLB, MCOM, and was a topper in SEBI NISM certificate in securities law course. He was also among the top 5 in his company to be chosen for and for completing the Credentials of Readiness program from HBX, Harvard University. He has also pursued the postgraduate diploma in intellectual property rights from Mumbai University. Aditya is a certified banking compliance professional, licensed social impact assessor, and a member of the Institute of Social Auditors of India. He is employed with Geo Financial Services. Let us now begin. I would like to invite Mr. R. Aditya Subramaniam ji to kindly take the session forward. Over to you, sir.
Thank you so much, Shaili, and a warm welcome to all the participants in this webinar. I'll just share my screen before I proceed with engaging with you on this very interesting topic. Yes. So basically, Taskforce on Nature-Related Financial Disclosures, when we say TNFD, it is a kind of reporting framework. We would have heard about TCFD, and we would have heard about certain other reporting frameworks like GRI, the more common one being that of NGRBC, which is India's 9 principled business responsibility and sustainability report, and so on and so forth. So what we'll do is we'll take a deep dive into TNFD, which is fairly new when we look at all the disclosures in the annual report, etc. TNFD has not yet been, reported actively by Indian companies, and so to say, even global companies. So that makes it very important for us to take a step back before we go into what are the questions that board members need to ask. And when we say board members asking questions means it will entail us as professionals in the sustainability domain to prepare ourselves to give those answers. Or an even better situation will be to preempt those questions. And in our reporting to the board or the ESG committee of directors or whatever be the fora which has been created within the company ecosystem, to upfront give these details such that these questions are answered through our presentation or an update to the authority concerned itself, rather than the directors having to ask questions. So we'll go a step behind to see what is TNFD, and then we'll go on to see what are the questions which are there in the minds of directors and what are the questions they need to ideally ask. So this is just a forward, and if you can see, it's a very simple outlay as regards presentation is concerned. We will first do a revision as to what is ESG so that we are all on the same plane. Then the next one will be what is TNFD, which is what I said, that we need to step a little backwards to understand the source, and then come to what we can see in serial number 4, which is asking better questions on nature by the board of directors. And thereafter, we'll have concluding remarks, and then it will be open to questions and answers. This is a standard disclaimer which I give wherever I go to speak on any topic. Views expressed are personal in nature and would not be construed to be that of the employer or the organizations that I'm associated with. Knowledge is an ocean, and the presenter is an amateur swimmer. You will see as to how nascent this topic is, or how recently it is, coming into fore, and how evolving it is. So, your views, your suggestions, your questions could also help, shape our collective intellect. And hence, the third bullet I've said, knowledge increases multifold when shared. So I look forward to your questions, which I hope we will be able to engage in a healthy manner. Uh, I'll try to answer those questions, but the idea is we should evolve collectively on our understanding as to what is TNFD. How can we propagate this in our respective companies or where we go as assurance providers or as advisors or consultants to listed or large unlisted companies who are desirous of making a foray into the sustainability space. So that should be the collective outcome of these 2 hours that we'll be engaging with each other in. As I said, this is just a revision as to what ESG is all about. E and S and G. So we know E stands for environment. And what could it include? And this is only an inclusive definition, right? And what I'm trying to portray on screen. It could include policies, and this is on EMC. Policies could be very many, right? Like what is a written policy as a policy document or as a board direction on what needs to be followed, etc. So in this regard, what we will do is we will just see as to what are the key areas on the E space, which is environment, right? So impact. So many of the annual reports or the sustainability reports have evolved from being just a reporting tool or just ticking the box as far as different frameworks are concerned. And then there are these stories of impact narration. Of all the steps that a company has taken, what is its impact? Is also what is a theory of change. So all of these things are being increasingly written by companies in its annual report or in the sustainability report. Energy consumption, energy intensity. So when we say intensity, we would appreciate that consumption, as compared with say our turnover, our employee count, or whatever be the other parameter. It has been standardized at least for BRSR by SEBI. Then our greenhouse gas emissions or our carbon emissions. What is our primary energy source, right? Many of the companies have switched to the green tariff model. When we say green tariff, means the regulator for electricity distribution companies, which is MERC, had a couple of years ago issued a direction to all the electricity distribution companies saying that if a customer wants to opt to source all his energy needs only through renewable sources of energy, the electricity distribution company should be able to satisfy such a request from a customer. And then it is called the green tariff. I think there's a marginal amount of 66 paise per unit which such a customer pays, but then the bill which such a customer receives will certify that all of the units have been sourced from a renewable source of energy. And at the end of the year, there is a certificate which is there in one of the I think the rare page of the bill, which says that from so and so to so and so period, you have sequestered so much of carbon by choosing to opt for renewable sources of energy as your source, etc., etc. So that is also very important. Water management, waste management, I would not delve because much into, because these terms are self-explanatory. And then I'll go into say the climate change vulnerability has also become a huge topic now, because the kind of heat related job losses which are happening, heat related loss of wages which is happening, that is come to light even this year, because in India also the weather pattern has been such that we all have been witnessing soaring temperatures and for a continuous stretch of time. So climate change related vulnerability also is a very important aspect under E. And then raw material sourcing, like how water intensive is our manufacturing process, or how much of a dependence is on forestry, and what are the steps that we are taking to sustainably extract these virtues from nature, and so on and so forth. S. S, as we all know, stands for social, and it could include monetary or non-monetary benefits to employees, right? Something like, say, providing a crash facility to the employees of an organization. That's a non-monetary benefit, right? Then, what is the kind of attrition rate that an organization has? That is basically representative of probably what the company espouses or what are its policies. How much of time, efforts, and money are invested by the company for training and development? That is another area. Healthcare benefits, human rights. What does a company stand, and checks and balances as regards, child and forced labor? What is the gender parity? Does it have, equal pay for equal work? Is there any kind of discrimination which happens? What is the inclusivity as regards people with special needs or identities are concerned? What is the company's stand or contributions as regards social work is concerned? What are its practices or principles as regards local procurement, which is considered to be more sustainable, are concerned. Uh, Not only within their company and their ecosystem, but also in the larger ecosystem with that of the vendors or the supply chain. What are the labor practices or standards that they follow, right? So these are the things which come under S. And G basically would include, ownership and control. How democratic is the process? How transparently voting results are disclosed. What is the representation of male, female, etc., that is the gender diversity as far as the board of directors is concerned. What is its stand on anti-bribery, anti-corruption? Are there enough policies? Is it tax aggressive, tax evasive? What is its tax policy? So these are some areas which come under the realm of governance. The reason why I gave this background is because when we talk about nature and this task force on nature related financial disclosures, we will be able to appreciate that it's not only nature, 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 right? There is an overlap between governance and between social, and we will be able to appreciate it even further when we, revise in the manner that we did. We all know what are the different global reporting frameworks are concerned, or the global frameworks. It started way back with triple bottom line, or colloquially it's called TBL accounting, wherein there were three P's, that is profit, people, and planet, which is what was the basis for reporting and then measuring their social and environmental impact. The more popular one, and also which has inspired our own BRSR, which is the Business Responsibility and Sustainability Report, which is mandated by SEBI. GRI, it, it focuses on shareholder And so basically stakeholder, there are different stakeholders, and that is why in the BRSR also we would see that one of the questions is pertaining to stakeholder engagement. Do we have a policy? What is the frequency of engagement? How did we identify a particular stakeholder to be a stakeholder of the company, and so on and so forth? So there is this importance which has been given to a stakeholder rather than just one of the stakeholders, which is the shareholder, right? Then we would have seen many companies reporting on TCFD, right? So, which is the Task Force on Climate Related Financial Disclosures. Basically, companies which are operating, which have a fairly higher exposure to climate related changes, there are certain parameters and principles, or they call it as the four pillars for reporting. So many companies have adopted TCFD as one of the global reporting frameworks. Then we have the Sustainability Accounting Standards Board, which is also a global board, wherein the IFRS Foundation has taken over it, and now it is known as the International Sustainability Standards Board. So even this TNFD draws inspirations from the standards which have been issued by the International Sustainability Standards Board. Certain other ones which I have not gone on to explain, because again they are more popular, or they are self-explanatory, like carbon disclosure project. That is also one reporting framework. Large companies, including the State Bank of India, have been reporting on the CDP framework, wherein there's a lot of emphasis on carbon emissions, then what is our path to net zero, and so on and so forth. Carbon neutrality as a concept, what is the company's stand on that, or how is it progressing? Then there is this again IR, as what is popularly known as, which is integrated reporting. There are six capitals under which one has to report, like manufactured capital, intellectual capital, human capital, so on and so forth. So that is another popular reporting framework. Many companies have been reporting on this framework as well. And then we go on to the UN Global Impact, and the most recognized, which is the UN SDG, or the UN Sustainable Development Goals. So these are just a few reporting frameworks which we get to see to be popular on various annual reports or the sustainability reports. Now I present to you as to what does TNFD stand for, what are its principles, etc. So this background was also important, so that you are able to understand as to what is the peculiarity, or what are the unique features that a new reporting framework like that of the TNFD brings before all of us. So that is why what is TNFD is the next segment, before we do a deep dive on what are the questions that the board of directors need to ask. So the Task Force on Nature Related Financial Disclosures is a global market-led initiative designed to help organizations factor nature into corporate decision making. So, in this, we have all the G20 governments as signatories, and of course, it is being accepted and adopted by over 180 countries. Uh, how is it managed? This TNFD consists of an advisory board, etc., which has about 40 senior executives in the sustainability space from across the world, right? And TNFD, how many companies or initiatives are there which have adopted the TNFD framework for reporting? So there are about 20 trillion assets under management in USD terms, which are represented by the companies which adopt the TNFD framework. What is the goal of TNFD? Basically, to shift global financial flows away from nature negative and towards nature positive outcomes. So, many times, what happens is nature does not come in the discussion table at whatever be the platform, be the board meeting, or whether it is something to do with an acquisition, whether there is an assessment which is being done by, say, an investor of the investee company. So nature is not necessarily the center for discussion. Of course, there could be a lot of tick in the box kind of an exercise which is being done so as to say that yes, we from a sustainability parameter also we have evaluated the proposal or we have reviewed as the case may be. But that need not be a transparent approach towards nature related approach adopted by such company. Now, how does it function then, right? So we say that it has been adopted by so many countries, 20 trillion USD as AUM, uh, G20 countries leading 40 senior executives from the world who are monitoring, bringing up, discussion papers, policy advocacy is happening, and the 40 senior member leadership also includes members from royalties of different countries like, which are governed by a monarch. So yeah, it's not necessarily only to have been adopted by democratically elected governments, but also monarchies are also signatories and are represented in the senior leadership team. So how does this function? Basically, is what I've tried to capture in the first sentence here, that it is market led, because what are the market practices at present is what will be reviewed. Now, reviewed how? Reviewed in the lens of nature, which is what we saw in the previous slide. And once it is reviewed, how is it going to influence advocacy? How is it going to influence a thought process, right? Because it's a new area to bring in nature directly into the discussion table. So it has to be science based, because if there isn't science behind what is being advocated, then even the slightest of interest which we would have noticed among the policymakers, board of directors, or say active investors, that will also go away, because then they will say that there is no scientific basis to what you're proposing, or to what you're asking us to think on or execute. And all of this, how can it happen in scale? Because as we know, nature is something which is not compartmentalized to only a country, a region, or continent. It's like absolutely global. What happens in, say, an example is that of a state within India, which has certain climatic or nature related challenges. How it impacts the neighboring states. You extrapolate that to a region, what happens in a country, how it affects the neighboring countries. You zoom out a little further, how in a particular continent what happens impacts the countries in another continent, and so on and so forth. So that is why it is a government supported global initiative, because if there isn't an intergovernmental agreement or support, then all of this is not going to work out. Then the recommendations and guidance, because see, these are not like the Paris Accord, or it's not like the Kyoto Protocol. These are only recommendations and guidelines. There are no penal implications as yet for not having adopted the TNFD related disclosures, right? So the recommendations and guidance provide organizations with risk management and disclosure framework. So many times what happens is, and when we're talking about countries across the globe, and not necessarily the G7, G20 countries. Many times they may not have the intellectual capability as yet to understand how do we articulate. Like they will definitely have the intention to keep nature in the center of all discussions, be it corporate or governmental, but how to articulate that, how to have metrics and targets, how to evaluate or quantify what are the challenges is something that comes with certain amount of training, right? So TNFD provides that kind of an advisory guidance or recommendation, not only from, say, a risk management perspective, but also on how you will articulate in your reports so that the other stakeholders who are not internal to the organization also get to know of it, right? And as I mentioned, it's an evolving topic. The nature related challenges also every day we are seeing it is simply evolving. Even if we take, say, something like cyclones, right? Or if we take something like tsunami, what was there in the past, the pattern, the flow, the timing, the measurement of the depression in the sea, all those parameters also have undergone change over the years owing to multiple factors, right? So then it is absolutely evolving in nature. So when it is so dynamic, how does one keep pace with it, right? And what are the risks associated with it, or what are the opportunities that it brings to such companies? Um, then they're designed to provide decision useful information to capital providers. See, now lenders, investors, they have also gotten so ESG sensitive that the BRSR, which is mandated only for the top 1,000 listed entities, is not what is limited to the top 1,000 listed entities, right? A lot of these unlisted entities which are proposing to go for the next series or round of capital raising, they hire professionals like you or consultants to advise them on their positioning from an ESG perspective, from or a reporting from an ESG perspective to such stakeholders, right? So that is why capital providers and other stakeholders is what I have mentioned in the sentence. And TNFD gives additional guidance or helps organization to assess their own nature related issues. So apart from something which would impact their country, their region, or a topical guidance, if if an organization wants to have tailor-made approach towards nature and nature-related financial disclosures, that also is something which TNFD provides. Now we saw, like how the six capitals of IR and then the 118 or so principles under GRI, the four pillars under TCFD. We saw all of that, the nine NGRBC principles which are there in the business responsibility and sustainability report prescribed by SEBI. So every reporting framework will have a disclosure metric around it, right? Which is what I just mentioned or recapitulated right now. So TNFD as a framework, it revolves around what is what we are trying to see in this slide and the subsequent two slides. So this disclosure framework revolves around four pillars. Okay. So even before that, as I had told about, ISSB. So there has been inspiration drawn from TCFD, which is also what we had seen in the earlier slide, to be a separate reporting framework, global reporting framework, and that of the ISSB, which was also there as one of the bullet points in that slide. So they have taken inspiration from these two reporting frameworks, and the recommendations are structured around the four pillars of governance, strategy, risk and impact management, metrics, and targets, right? So before we do a deep dive in the next two slides on each of these disclosure pillars, um, why are we doing this? We are doing it because the dozen questions or so which will come subsequently, which when asked, right, by a board of director or so, how does fund basically relate to a reporting framework? Unless and until we know the disclosure pillars, we will not be able to join the dots. We will not be, one can't directly go into a boardroom related question without understanding what this framework is all about and what are its, key pillars. So governance, strategy, risk and impact management, these are all words which are self-explanatory, right? So we will just do a deep dive in this slide and the subsequent one. When we say governance, basically what uh, the TNFD framework asks corporates or the reporting entities to look at are the disclosure from an organization's governance of nature related dependencies, its impact, and the risks and opportunities. So when we say nature related dependency means for the company to function, how much of it is like dependent on nature, the virtues of nature, so on and so forth, right? So, and what is its impact? Like, suppose say it's like a sugar manufacturing mill in a drought-prone area. We all know like sugar manufacturing or sugarcane plantation is highly water intensive. So, does it make sense to have such a plant in an area which is prone to droughts or which doesn't have a good groundwater table level, right? So, what is its impact? So, dependency, we know, okay, if it's a sugar mill, there needs to be sugar cane. So, that is a dependency. What is the impact that it could have, right? It could source a lot of water for its manufacturing, and then there'll be hardly anything left for the communities which live in the vicinity. We all have also seen, like, say, in cities like Mumbai, we have seen that when there are two adjacent housing complexes, how one housing complex does some kind of a boring and then puts a motor or a pipeline with a larger diameter so that a lot of water which comes from the corporation is entering that particular housing society's tank rather than the adjacent one, and how the adjacent housing society probably will see lower pressure in the flow of water from the corporation than what it was before. So all of these things we are seeing, no? What are the impacts? What could be the risks, right? Is there a risk of getting sued? Is there a risk of loss of reputation? And what are the opportunities? Like for, as we say, risk and rewards. So, it goes as risk and opportunities also. So, what are the opportunities that such a company has? The example which I gave, right? So these are the things that which the first pillar on governance, makes a company to think on and on report. So within that also we have, say, the board's oversight, right? When we say the board's oversight means again on these areas of nature related dependencies, impact, risks and opportunities, etc. So how is the board evaluating all of these, four ingredients? Then the next one is the management's role, right? What is the management's role in assessing and managing nature related, dependencies, impact, risk, and opportunities? So, because the management has to assess, and that is when its assessment is transformed into a board note, and then it goes to the board for it to exercise its oversight. So, how does the management assess all of this? Then the next one is basically to describe the organization's human rights policies, and engagement activities, right? Which will lead to an oversight by the board subsequently with respect to various factors, like say even indigenous people, right? When we talk about nature, we from an India perspective also, if we see nature and indigenous people, in most cases they go hand in hand, right? We talk about tribes across different states in India. So when we talk about tribes or tribals working in an area which is ecologically sensitive, your company is in that particular area into say mining or say into oil exploration, as far as fisheries are concerned, what is its impact, etc. So human rights, when we talk about, it is on indigenous people, it is on the local communities, right, which is a layer beyond the indigenous people, and certain other stakeholders which the organization is supposed to assess. So is it assessing, not assessing? What is its response in case there is, say, some kind of a protest, or there is a letter which has come from the local communities, giving an advice on certain aspects? What is the company's approach to that? How is it responding? All of this comes under governance, and which is why it is the very first pillar. If you can see, some of it is top down, it is also bottom up. So governance is one of the first and the key pillars as far as this reporting framework of TNFD is concerned. The second pillar is that of strategy, right? Now, as you can see in the para below, strategy, companies need to disclose the effects of nature related dependencies. Now, effect, right? What is the impact, risk, and opportunity on the organization's business model, strategy, and financial planning, where such information is material, right? So, materiality is very important as far as reporting under this pillar of strategy is concerned. So, what are the different aspects which could be there, right? Like, for example, companies would need to describe the nature related dependencies, impacts, risk, and opportunity which the organization has identified, but it has to be classified as short term, medium term, and long term, right? So, that is how it needs to be presented or reported. So this is one of the aspects which come under the strategy pillar. Then the next one that we can see on screen is that of describing the effect of nature related dependency, impact, risk, and opportunity as regards the business model is concerned, as regards value chain is concerned, right? Both upstream and downstream, our customers, our vendors, etc. How is it impacting them, right? Then financial planning, and having identified certain vulnerabilities, what is the strategy towards a transition plan, right? So that is another area under the pillar of strategy. The third one will be the resilience of the organization strategy to nature related risk and opportunities, taking into consideration various scenarios. So, a scenario based assessment is what a company would need to do, right? Okay, if my dependence can be reduced on so and so, which comes from nature, how do I compensate that? Because I would not want my business to suffer a loss, right? What is the alternative? So, multiple scenarios would need to be built in so that the optimum strategy is what is adopted by the company. And in the last that you can see as one key area under the strategy pillar is that of disclosing the locations of the assets or the activities of the organization's direct operations, right? And where possible, upstream and downstream value chain that meet the criteria for priority locations, right? So you're saying your strategy is okay, you're saying your governance is okay, so then you let me know as to where all do you operate, right? So that I am able to independently evaluate whether your strategy is on the mark, bang on, or whether the governance model that you have adopted is perfect or there are gaps in it. So you disclose to me as to what are the areas or which are the locations in which you operate, and then what are the priority locations. So you'll have a corporate office somewhere, but that may not be as concerning from a nature perspective as say the patch of land where you're doing mining, right, or the place where you're doing offshore drilling, so on and so forth. So that is the second pillar on strategy. The next pillar is that of risk and impact management, right? Impact, in the second slide or the third slide, we have seen as to how companies are now increasingly adopting, a narrative around what is the impact that has been felt across different stakeholders as regards the company's operations. So, it becomes very important for us to, when I say us, reporting entities or companies, to describe the process used by the organization to identify, to assess, prioritize, and monitor nature related dependencies, impacts, risks, and opportunities. So, these are very important words that come into picture, right? Identifying. So, the first stage is identification or what are the risks, okay, and what could be the potential impact. Then when you identify a particular risk, you have to quantify, right, what will be the impact of damage, or what will be the risk that we'll be taking upon ourselves if we proceed in a particular manner. So that needs to be assessed. So that is the second step of assessment. And then comes prioritization, because there are so many things companies will be bogged down with, the pressures of the stock market, the pressures exerted by the investors, the pressures exerted on the management by the board of directors. So in all of this, where does this stand, right? Nature related financial disclosures, or identifying from a nature perspective as to what could be the risks, what could be the opportunities, what could be the impact of the functioning of a company. All of this, where does it stand in the order of priority, right? So that is why prioritization, and then merely identification, assessment, and prioritization will mean nothing unless and until it is monitored, right? Periodically, when it is presented to the board of directors, then they will say that, please come to me, at the next meeting, after having adopted mitigation measures or healthier ways to, operate or conduct the company's businesses, and so on and so forth. So unless and until there is monitoring, it will not mean anything much, right? So, which is why I have mentioned that it will lead to the process of integration. Unless and until there is, monitoring. If you do monitoring, what is it for? It is for seamless integration into the company's operations. The TNFD related disclosure framework should not be seen in isolation. It has to be such that there is a seamless integration of the matters which emerge out of such discussion under these four pillars that we are seeing. Um, it has to be integrated into the day-to-day operations. It cannot be only for reporting through, some fora like the annual report or the sustainability report at the end of a financial year. So that is why in the last bullet I mentioned what is the process to integrate all of this, the understanding or the learnings out of the identification, assessment, prioritization, monitoring process. How are we integrating the outcome of this exercise in our day-to-day operations? So that is the third pillar, very important also, which is the risk management, risk and impact management pillar. Now we come to the last pillar, which is the metrics and targets, right? Now, for anything, for us to see what is its impact, or what is the quantum of change which a company has seen after having adopted this reporting framework, there needs to be some kind of a metric or a target. When we say target, means that is aspirational. Metric is something which basically keeps us, under a check, right? What are the metrics that we adopt to communicate, to report, and how is it tied up with the aspirations of a company, which are basically the targets. So this bit is about transparently disclosing, right? What are the material metrics? What are the metrics to assess and manage the dependency that the company has on nature? And of course, targets and goals. How the company sees its performance from a nature inclusivity perspective in the years to come. What are the targets that it has set for itself to be achieved, and by what timeline? So all of this is also extremely important, a pillar among the four disclosure pillars under the task force on nature related financial disclosures, which is TNFD, as we have seen at present. So um, all of this, when we say to be the disclosure pillars, right? There needs to be a principled approach to the four pillars, because they cannot come out of random, right? So what are the principles which take shape in an organization's functioning, which at the end of the year the company chooses to disclose to these four pillars, right? What we have been seeing is a post-mortem reporting. So disclosure is after a particular time period or after something has happened. And but what are the principles? Principles are one step behind. You adopt certain principles, you work to achieve those principles, and which is what at the end of the reporting period gets reported or disclosed through these four pillars. So, some of the principles which companies seem to be adopting as far as its approach to the TNFD disclosures are basically market usability. Like that is one principle. I am doing all of these measures. I am maintaining metrics. I am setting goals and targets for myself. I am doing impact assessment. I am doing risk identification. Then I am doing periodic monitoring. But what is the market usability for it? Right? So the direct usability, or the what value it adds to the market participants is the stock exchange or the participants mature enough to appreciate what goes behind as far as the company's sensitivity to ecology or nature is concerned. So that is a primary principle or a primary driver for a company to see how it adopts the TNFD disclosure framework. The second one is that how science based is it, right? When we say this is a mitigation measure that we are adopting to an identified risk, or this is the opportunity that we want to exploit. So, how science based is it? Is it fantastic? Something like fantastic as in, is it arising out of a fantasy which doesn't have, say, much of a metal when it goes to implementation, right? So that is the second principle, how science based is our approach or a company's approach. Then nature related risks, that to be prioritized, because many time what happens is business risks can come from or do come from various areas, right? You can have an operational risk, you can have an information security risk to be a subset of that, forest risk. I did not talk about risk to all of these participants who are there, they are well versed, right? But it is important for us to fish out or sieve or filter the risks which come only from a nature perspective, so that we are able to channelize and focus our efforts through the year, which at the year end will be reported under the disclosure pillars that we have just seen. So it is very important to identify the nature related risks or separate them for a specific approach. Then the next one is purpose driven. What is the purpose? Is it only appeasement? Is it only showcasing what the company, seems to be doing as far as the ecology or the nature is concerned? Or is the company really from the heart concerned about these areas? Or is it that it chooses to do only tick in the box as far as following government norms are concerned? Many times what happens is the norms could come a little later. Largely it is reactionary in nature, right? Legislature or the executive circulars which come. So by which time if a lot of damage would have been done, then this principle of purpose would be defeated. That we did not have that purpose to conserve nature. We were only ticking the box. We were only going by what the government asked us to do. We were not asked thus far to do this, so we went about doing it. Now that a law has come in this direction, we will follow it. Whether that is the approach, right? What is the purpose behind a company's initiatives on the nature front or the TNFD front? Then the next one could be how integrated. You had also seen in the previous slide that I had mentioned, unless and until, even in the last bullet on the left hand side, unless and until it is integrated into the business operations seamlessly and is not seen as a separate exercise, that oh, now the nature team or the sustainability team has come, it is going to give us some gyan, now let us listen to it. It cannot be like that. It has to be something which is seamlessly integrated to the business operations, wherein the people in the business operations are only champions of sustainability rather than have a separate set of people to think about it. Which is why the climate and nature nexus, right? As we know, climate is something which changes over a period of time. It's not like weather. Like today's weather could be warm, tomorrow it could be cloudy, but a climate is more long term in nature. So the nexus between climate and nature is something that we will need to see as companies, because our operations having an impact on nature is what will have an impact ultimately in the climate of that region. And which is why about 3 slides ago I mentioned that the key area, uh, or the 4 pillars of disclosure under TNFD, have also gained inspiration from TCFD, right? The Task Force on Climate Related Financial Disclosures. So there is a nexus between nature and climate. So what does the company stand in that is also one of the principles which the company needs to think about and see how it can be executed. And lastly, as I had said, it is not any region specific. Companies have to think that, oh, I'm a company in India, then how is it going to impact Brazil, right? It cannot think like that. So the seventh thing that I feel is the global inclusivity. Somewhere or the other, the steps that we take today at our places is definitely going, and when we're talking from a nature perspective, is definitely going to impact someone else staying somewhere else. Unless and until we as reporting companies or corporates appreciate this, we will not be able to be fully convinced about such disclosures. Like it will be like, oh, something additional has come in, already we were bogged down with so many disclosures, be it under the SEBI listing regulations or under Ind AS, or if it's overseas then IFRS and so on and so forth, and now this has also come in. So that should not necessarily be what a company which is truly conscious about nature and its impact, the risks, as we saw, uh, is concerned, right? So it cannot be a tick in the box kind of an approach. Now we will come, because now is when we will be able to appreciate what are the questions that the board of directors should ask or could ask. And which is why I say it is important for us to also know about each of these questions which could be asked by directors from a TNFD perspective, or which um, are being asked, like not to underplay the board dynamics, right? It will help us prepare ourselves in a better manner. If we are consultants to some entity, it will help us in our advisory or our handholding of such a company to whom we are rendering our service. If we are employees in the sustainability team or the compliance team or whichever be the team which is looking after sustainability for the company, it will allow us to preempt these questions which could come at a board meeting. And then our presentation deck should already have these matters clearly mentioned and articulated. So these are some questions. There are about a dozen of them. Simple questions is what it will seem to be, but to answer those questions satisfactorily, there is a lot which would need to be done by the management, by the company. So let us look at these questions, because increasingly what we have seen is, unless and until things come from the top, especially in matters regarding nature, the level of adoption could get impacted, right? There could be some employee in some region, say in Rajasthan, who says that, definitely the way, we are operating as far as our mining activities are concerned, etc. Though I'm an employee, I feel we need to undertake certain changes from a nature perspective, right? When such an employee says that is bottom up, will it be taken as seriously if it turns out to be a board conversation? Obviously, the latter, right? A conversation which happens at a board meeting, or which is a directive of the board of directors, will be pursued with much more rigor, with much more seriousness than what probably could come from the bottom. A parallel you can see in the Prevention of Money Laundering Act, is it not so? Wherein previously there was only the office of a principal officer who was, given this responsibility of, anti money laundering. Over the years there was an amendment which said that there has to be one director also who is to be made responsible for these activities, and hence the concept of designated director came into place. And then suddenly the boards woke up. They said, on a quarterly basis, give us an update, because now the board, and more so from within the board, one of the director is handpicked to be that of a designated director. So then what happens is, the seriousness, the rigor which came in was much more than what it was before, when there was just a member of the workforce, who one among them who was named as or designated as the principal officer. So that is why, while there are certain other questions which could have been asked from the perspective of, say, a chief investment officer or so, which is also a separate discussion in itself. More importantly, what I chose was, what are the questions which should come from the board of directors, which will make or which will force the company to act on it. And if it forces the company to act on it, who is going to be the ultimate beneficiary? It is going to be the nature, the communities at large. So now let us look at what is the, background. See, nature as a core business issue is a director's responsibility, which is what we are now growing to think, right? When we say that, top down approach is what works in this area, the accelerating rate of nature loss. We've seen so many, case of loss of ecology be it from oil spill or forest fire or some gas leakage, etc. The world is now, exposing businesses and society to significant and increasing financial and operational risks. In the two three examples which I just quoted, right? Say oil spill. Was there a financial loss? Obviously. Was there an operational risk? Obviously. Now, if we are to see something beyond, say, an oil spill, a gas leakage, we do not need to discuss a lot about it because we are all mature individuals to appreciate as to what is the kind. Recently, it happened about 200 people, near Nagpur. It happened. We all would have seen it in the newspapers. So the kind of impact that it has, the kind of damage that it can cause, definitely is a lot, impactful from a negative perspective. So the operations of the companies are now increasingly exposing the society at large to such risks. This is across sectors, it is across regions. Companies are seeking that their share price, their credit rating, their market capitalization, which are coming under pressure from an array of nature related issues, such as air pollution, fresh water shortage, which is what I alluded to in my earlier example of, say, a sugar mill, or say deforestation, or for that matter, even now, like, increasingly people are getting aware of microplastics, right? So a lot of toys are now labeled as toxic free and nature colored, uh, no microplastics. You'll see a lot of these toys have these labels and stickers pasted on it. So microplastics. These are all new areas wherein a company's operations would need to be seen with microscopic lens, right? And then there could be demands from governments, there could be demands from investors, there could be demands from consumers. We are also seeing a lot of consumer activism, which is also good, right? And we are seeing as to how big companies are taking those activists who post certain things on social media to court and drag them to unnecessarily litigation, etc. And they are testing their metal. They're trying to pressurize them to buckle down, etc. So there are these different agencies or factors that you can see, which are definitely making companies to think from the perspective of nature related issues, right? So in short, for any business, it depends upon how resilient it is to nature. So when we put ourselves in the shoes of that of a director, so we could be, among the participants, we could be directors in some companies ourselves, right? Or we could be advising the board of directors, or we could be advising a company which has a reputed board of directors. It could be on the risk front, it could be on the sustainability front, it could be on, in our role as auditors, as to what are the notes that you would want to give from a sustainability or a nature perspective. So which is what, as a result of the increasing frequency and extent of nature related risks and opportunities, directors duties have been shown to encompass the identification and management of nature related issues. So it has become, so with transparent reporting, with any say untoward incident being getting blown out of proportion, the first thing people will see that who are the directors. The next day the Economic Times or any paper for that matter will have the photographs of the directors or the names of the directors and so on and so forth. So it's very important for a director. That is why I've written the second paragraph that as a board member, managing your organization's dependencies and impacts on nature is part of your core legal duties to exercise loyalty, care, and diligence. So it is a core duty. It is not just to give strategic direction from a business perspective. Core legal duty also includes, if you see Section 144 of the Companies Act, which talks about duties of directors, there is also a veiled reference to the responsibility or the duty that a director has to the nature at large, right? So it forms part of your role as a director or as regards driving forward a company strategy that ensures the long-term financial viability of the organization. When we talk about long-term financial viability, it would also mean that there should not be any hefty penalty which is levied on a company, so much so that it forces a company to bankruptcy. So we saw strategy to be the second pillar among the four pillars of the TNFD disclosure framework. So these are the responsibilities of directors. In conclusion, I have got some three scenarios wherein across the globe, okay, like one is UK, the second I have Japan, and the last is from Australia, all from different continents, how courts have kept the directors responsible for a lapse in any kind of a nature centric issue. So, this is the background behind which the dozen questions that you will see in the dozen slides uh, are becoming increasingly important to be asked in the boardrooms or to be made part of boardroom conversations, right? So, this is the first question. The first question is, how and where does our business depend and impact on nature? So when we ask these questions, we should put ourselves in the shoes of a director. A director is asking the management, a director is asking the chief executive officer that how and where does our business depend and impact on nature, right? So, fulfilling our director's duty. When we say our directors, it could also be from the perspective of a company where we are advising and where it has got a board position as a nominee director, right? Wherein we would have advised on a particular transaction, and then the entity says that we would need your consultation for a little bit more time as far as the system integration is concerned or integration of business operations is concerned post acquisition. I'm just giving you multiple scenarios because all of us in this call are professionals, right? So whatever we are discussing in these 2 hours, how does it translate in me becoming a better professional? How does it translate in me offering the kind of service which probably my peers or my competitors have not thought about or not offering yet, or if they are offering, maybe I would be able to do it in a more effective manner, or so on and so forth. That is the purpose of having this conversation and dealing with an absolutely. This is under 2 months. This is March 2025 when all of this came out. So we could be among the first few people who are discussing on this. When I say discussing, for now it is a monologue, but then I will look forward to the questions which would have come in the Q&A box and which will be posed before me by the moderator in the last segment of this session. So this is as new as under 2 months old, right? So that is what could give us an edge, a fillip beyond our peers or our, fellow professionals. So coming back to this question, right? So I have only written the question because this is something which we all have to think from our own experience perspective, from our own thought process, from our own principles as far as the ecology or nature conservation is concerned, right? So it is very important to manage our organization's nature related issues, which starts with pinpointing how the business relies on the nature's services. When we say nature services, it could mean what are the services the nature is giving us. Like, for example, it is providing us water, so that is a service. That's just a way to not use the word exploiting the nature, right? Nature is giving us that service, the sunlight that it gives, and so on and so forth. So we have to identify the geographic locations. As a director, I'm saying we cannot be completely looking the other way around when we know that the operations of the company could be detrimental from a nature perspective. So, which is why it is important for the directors to wake up and ask these questions, right? So, what could be the management's answer to this? Right? A management to this question could say in the following parameters. One is the location specificity, which is why I mentioned when a director asks, okay, where all are our plants, right? Because say if it's a large conglomerate which has got various plants across the country, what comes to the board is an aggregated reporting. Okay, but then what could be lying within the surface are the specifics to the details as to where all are the plants. Okay, is it in an ecologically sensitive area and so on and so forth. So, first is location specificity, wherein the management, while giving a response, or as I said, while proactively mentioning in its presentation to the board or the board note, it has to say that the location of the company's nature related dependencies and impacts, including insights about any particular concentration in a specific location. Like, for example, if we have different plants in the same region, say in this case, Madhya Pradesh, right? If we are doing, say, if we have a CBM plant or if we are doing some mining of coal, etc., if the same entity has got multiple locations in the vicinity, or say Upper Assam, right, where you have a place called Digboy, where you have Nualia, then you have Margarita, and these places which are all close by, but which have their drilled wells next to each other. Drilled wells means the oil wells next to each other. So as a management response, what I will say is that these are the different areas, but then there is no concentration on a particular area in itself, which could directly accelerate the impact on the environment that our business operations may have. So that could be an approach. So merely writing what the board could ask is not what will complete this conversation, right? When we say this could be a question which could be asked by the board, we should also be equipped as to what could be the various methods in which we answer this question, which could be posed by the board, right? And then what we need to also mention is the robust mapping of our functioning or our company's functioning across a particular area, and it should also include potential future. See, because what happens is the board, when it gives a strategic guidance, it should be also as far as the next steps or the future steps are concerned. So even if the management is planning to open a new office or say set up a new plant in future in the upcoming months in a particular area, that also would need to be promptly mentioned, and not just where our operations exist, right? Because dependencies and impact, they can interact and compound over a period of time. So time as a factor also would need to be factored by us in our response. Okay. Suppose say a plant has just been set up and impact is being evaluated as to whether it is as positive as we had thought when we said we will set up a plant with all of these guardrails or checks and balances. Are they working? Or is it that all of it has failed and we are blatantly abusing nature? Right? So, time as a factor also would need to be clearly articulated in our response. One is, what are the different areas, and what are whether there is any concentration of those areas, and now what from the perspective of time. Uh, the next aspect in our response could be the negative or the positive impacts, right? Like how in this example which I gave, if the guardrails, if the checks and balances that we had set about while starting the business or in the new area where the company has forayed in, if the impact has not been as favorable, so basically negative impact. So such impacts on nature, which could be both negative and positive. Negative would mean degradation, that nature was better off before you opened office, or a positive impact, like say, okay, to set up this plant in this ecologically sensitive area, I have had to say cut 200 trees. But then what I have done is I have try to transplant and nurture a few of those trees, something like that. So a positive impact could be an enhancement in the ecological quotient of that area, right? So and then we should also look for insights about both negative and positive impacts which could be having on those locations. So there also what we should ensure, now speaking as a director, is that the extrapolation or the aggregation should not result in us looking at the specifics. Suppose, say, in one area where we have a plant, we are doing very well ecologically, but then in another, we are absolutely bad. Then what happens is in our reporting, whatever be the parameters, when you report the impact, when we report the risk, in a netted manner, then that particular location or area where our office or our plant has been doing miserably gets shielded. The board does not get to know of it, which is why I said I come back to a board's perspective. In between, I said how could a management respond, or how could it proactively, present certain details in the presentation deck or in the board note. But the last part which I mentioned is about, again, our director has to be mindful that in aggregation or netting, the finer aspects do not get hidden. The next question is, how do our dependencies and impacts on nature give rise to potential financial and non financial risks? Right? So, in this, as a director, what could I ask? I could ask about the current and future operations, which both pose a risk for our business, our shareholders, our stakeholders. For example, again, I come back to mining because, from an ecology environment perspective, that's a favorite example or the most relatable example that could be given, right? So, say, suppose there is a mining company which is highly dependent on purified fresh water. Now, fresh water, I gave the example of, say, a sugar mill, right? Now I'm giving the example of a mining company. It is exposed to financial risks in the supply of water becomes diminished or disrupted. So fresh water, you could either have a desalination plant somewhere which is expensive, or then you have it supplied through different vendors in cans or tankers, or depending upon what the usage is, right? So then what if it gets diminished, or what if that supply chain gets disrupted, right? So an aquaculture company that has a negative impact on marine ecosystem by, say, releasing waste or toxins or chemicals or medicine remnants or effluents which are discharged in the water body, right? So in that case, these are the questions that the directors need to ask, right? What are the processes? What are the systems? And it need not necessarily be, when I say board, it need not necessarily be the board. It can be a board committee also, right? Many companies have an ESG committee of directors. It could come under risk management because all of it is bordering reputation risk, is bordering operational risk, right? So it could be a risk management committee. So when I say a board, it is not necessarily the entire 10-member, 12-member board of directors. It can also be the appropriate committee of the board of directors, right? So considering the potential risks which arise in the medium to long term is extremely essential. right? Because see, short-term risk, etc., there will be a balancing factor which will help us, pass through that. But what happens is the medium term and the long term, which is what we saw in the second disclosure pillar. The first bullet I had mentioned is what is your strategy at a short term, medium term, and long term. So at a medium or a long term, what could be the impact is definitely to be assessed from the perspective of this question, which the board of directors need to answer. Board of directors need to ask. So now I come to how will or how should management answer, right? What are the ingredients of the management's answer? First will be to list down the types of risks, right? Because they're asking about potential financial and non-financial risks. So we should have various categories of risks, wherein you say nature-related risk can also be divided into various categories that you would have seen it in TCFD also, which is Taskforce on Climate-related Financial Disclosures, wherein there is a physical risk. Physical risk means if there's a location here and then I'm prone to flooding, or if my plant or office is in a seismic zone. So that is a physical risk. Then the next one could be a transitional risk, which is basically owing to, say, the vagaries of nature changing. What was probably a low risk area, is it, especially say which the level of waters in the coastal areas increasing. So I thought I was safe being, say, 5 kilometers inside the coast, but am I as safe today, right? And that is another risk that would need to be categorized. Then the next risk is systemic risk. Systemic risk, we all know, because systemic risks are, part of our professional day-to-day work life in our consultancy, in our advisory, or in our corporate setup. So the boards should be equipped with the list of these types of potential nature related risks, and especially from a financial or a non-financial perspective, right? So when we answer as management, the first type or the first step will be to say these are the risks that we have, and these are bucketed as financial, non-financial, as I said, physical, transition, strategic, etc. The next area again will be on concentration. In my first questions, possible response by the management, I had used the same word as concentration, but that concentration was from a geographical, presence perspective. Now, this concentration is on the concentration of risk perspective, which we also know in regulated entities. Also, there's something called as a concentration risk. So, the very same risk is what is to be addressed through our response to this question posed by a director, right? Then the next will be the prioritization criteria. As a management, what are the areas or what are the criterias that I give priority to? Like, say, example, we have a criteria for assessing the potential risks. Like, actively we look at it. Just because it's a smooth sail, everything is going smoothly, does not mean that we will not prioritize assessment of potential risks. One is what is already the risk which we already have with us. What the second is what is a potential risk, right? So as our organization, when I say our means, this is from a management's perspective, right? When we respond. So as our organization begins to incorporate nature into its existing operations, day to day, work chart, etc. At that point in time, what do we feel under each such process to be a potential risk? So again, as an answer to my first question, as a management when I was giving, the third segment is what could be the counter question by the director, which is why I said as a director we should be wary of being, brought with less information arising out of grouping, netting, extrapolation, etc. So even here, what is very important is that in the integration of sensitivity to nature in every workflow which is there in the company, where are the challenges? Now, again, if we say that okay, there were eight gains, okay, operationally, it has increased operational efficiency, etc., etc., and then there were say two potential areas of concern. Does the two potential area of concern get highlighted in the board discussion? Or is it that out of 10 parameters, 8 are very good, seamless integration examples? But those two examples which are problematic, which have caused the integration not to be as seamless, to have a 10 on 10 score, is there a discussion around it? Is this being highlighted before the board of directors? Is something that the board will need to see, right? So that is as regards question number two is concerned. Now we go on to question number three, which is how do our dependencies and impacts on nature generate potential opportunities for the organization? See, because being directors, we are not there to be showstoppers or roadblocks. Then what will happen is there could be a premature exit by the board member, or there could be a non-renewal of the boards, especially in closely held companies, etc. When it comes for voting for a second term, etc., they will consider such a director to be good riddance, right? So that is why a director is also to be seen or should be functioning in a constructive manner. So in this question, if you see, it is constructive in nature. How do our dependencies and impacts on nature generate potential opportunities for the organization? Now, when a director asks this question, right? So basically, what is the thought process behind it? The thought process is that every business should consider efforts to improve the resilience of nature. When we say resilience of nature, is the capability of nature to cure itself of the ecological damage which could have been done by a company's operations, like say even to make say a bus stop in a place, a particular patch of land would need to be cleared, right? So, but then what is the government doing or the municipal corporation doing such that the resilience of nature to cure itself of that damage which has happened through the clearing of a patch of land is taken care of? The resilience of nature, the capability of nature to cure itself, are we impacting that, right? So, uh, increasing the resilience of nature, and therefore the organization's future business is extremely critical, because both go in reducing the negative impact on nature. Like say, if you go on enhancing your production levels or exploring newer areas of newer geographies for doing business, but at the same time you're doing so while assessing the impact on nature's resilience, then what happens is it's a healthy progression by the company, right? The nature's resilience is also not impacted. Of course, some amount of nature would need to be cleared or need to be impacted, but the impact is such that the nature's resilience not having been impacted, it will help in say us with a clear conscience progressing with whatever we had set out to proceed with, right? And avoiding or reducing negative impacts on nature, or continuing or contributing to the regeneration of nature through business innovation, right? It may also present commercial opportunities. So when we say regeneration of nature, how? Through business innovation, right? So that is another area when we say will generate potential opportunities for the organization. So These are the questions that the board of directors need to answer, such that the kind of priority that they accord to research and development or to enhancing the resilience of nature is looked into actively by the management. Now, how will the management respond? Right. So, first is to avoid, like typically like how we say for taxation, right? Planning, aversion, avoiding, etc. So, likewise, when we talk about impact of nature, the first approach will be for the management to appropriately represent as far as avoiding, reducing, mitigating, or managing nature related risks are concerned. Okay, so under which bucket does our company's approach to the nature is falling? That will need to be bucketed, and I'm talking about management's response to this question. The second one will be, say, some strategic transformation in the business model, right? In our products, in our services. Suddenly, the packaging changed. If you see in all the delivery, quick commerce that we see, it is all now paper. Previously, it used to be plastic, right? The packaging industry has also evolved, wherein, say, perishable items can also be packaged in an ecologically friendly manner and not necessarily using plastic. So, there has been a lot of innovation in the area of packaging technology, right? So, that is where this question comes as to potential opportunities. Then the next one is, when we say as a management response, again the same point of integration in the present processes, right? So, uh, in the same example of, say, delivery of goods which have been ordered by a company's customers, right? How is it packaged? What are the new areas which are emerging in the world, which are more sustainable than what it was there in the past? So, as with nature related risks, potential nature related opportunities should be integrated into existing business processes for identifying and evaluating commercial opportunities. Now, all of these answers will come from your feet on street, from the people who are there in the factory as supervisors, workers, and so on and so forth. So, the goal here is a win-win situation wherein company is also expected to progress and grow, etc. Look for opportunities wherein your revenue also will increase, but at the same time keeping in mind the impact that it will have on nature. So this is another interesting question which a board member could ask. The next one, or question number 4, is what is the interplay between our nature and climate related dependencies, impacts, risks, and opportunities? Now, climate related dependency, impact, risk, and opportunity is something that we are seeing in very many slides, because that is the ethos, that is the blood vein of TNFD, right? Which is, what are the dependencies on nature that we have? What is the impact that we would leave on nature after we satisfy such a dependency? And what are the risks? Like, how long will such a supply come, right? Or if there is an operational gap, what is the risk that I'm posing to the communities, to the indigenous communities, to the water bodies, to nature at large, etc.? And lastly, what are the opportunities I have to contribute positively to the environment? So these are the blood vein of TNFD, and which is why it is repeatedly coming in different slides. Now, this question, why should this question be asked by the directors, right? Interplay between nature and climate related dependencies. This is what I had mentioned, that weather, if you remember about half an hour ago, I had mentioned weather is something which is short term. Today it is sunny, tomorrow it could be cloudy or overcast or so on and so forth. But Continuously, if there is a particular change in pattern, then it affects the climate. Likewise, severe afforestation in layman's language, which is easy for us to relate. If there is a lot of deforestation in a particular place, then what will happen is over a period in time, the climate out there will also change to be much warmer than what it was before. Another example which I could give, say, for people who come from cities which has rivers or coastal areas, a lot of sand mining, happens, maybe say legally to some extent, but largely illegally, right? So what happens out of that? The water level increases. uh, if it is a coastal area, probably the elders would say that, our village has come behind the original coast by 10, 12 kilometers because water has come in, the level of water has risen. So, this is the impact that nature can have on the climate. This is the interplay, right? So, how does our company contribute to such an interplay between nature and climate? Right. This is the question that the board would need to ask. So, in this scenario, how will the management respond? The management has to keep a consideration of the relevance of nature to climatic risk and opportunities assessment, right? So this is what I mentioned, that what we do to nature today will tomorrow, not immediately tomorrow, but in the near medium term, impact the climate itself, right? So we should look for evidence that the management is reconsidering any previous assessment of the company's exposure to, say, climatic risks, right? So that is what the management would need to do. Has there been any study done as yet? If not, can we initiate such a study? If it has already happened, that is, if yes, then in that case, let us take out that report and revisit it. Has situation changed from then to now, and so on and so forth? And then, if we have not yet completed climate risk or opportunity assessment, then we should ensure that nature is integrated in such an exercise from the very beginning. Okay, it gives us the opportunity to start things afresh. So when we get that opportunity to start things afresh, we do so in a manner that ab initio, or right from the beginning, nature is centric to such assessments. Then, uh, when we identify new opportunities, we should consider nature to be our ally, right? So we have seen how plastic plates are replaced by, say, uh, hardened sugarcane bagasse plates. You would have seen that in some of the functions that you would attend, that it is really hard. Like if you tap it on the floor, the sound would come. But it is not hardened plastic. It is sugarcane bagasse which has been made into a strong plate. And such a plate does not get soggy when, say, some liquid falls on it, say a dal or a sambar or whatever. It will not make it soggy or wet, such that we are not able to hold the plate, right? So it is an opportunity that has gone in having nature as our ally. Nature is giving the sugarcane bagasse to us. The sugarcane bagasse is used by us such that there is a cut down on the number of plastic plates which are utilized. This is just one example which I gave. There could be very many examples that you will be aware of. The next question is, how are we assessing and measuring our potentially material nature related issues across different time horizons? Which is why in the second pillar of strategy we have medium, short term, medium term, and long term vision, right? Different time horizon. And what data are we using and generating? Now, this is what is question number 5, which a board could ideally ask, and for which the management would need to be ready with a response, right? But here, when we talk about material nature related issues, we're not talking about any and every issue. What is the material issue? So basically, the concept of materiality sits at the center of a director's duty to manage nature related issues. As I said, I was able to look at some three instances across the globe wherein the entire responsibility for nature's degradation has been pegged on the board of directors. So it is very, very centric to a director's responsibility to manage nature related risks. So different organizations take different approaches to materiality because materiality is very subjective, right? And it is based on applicable regulatory requirements. Many times, some geographies could have certain thresholds prescribed beyond which it is to be considered material, right? The vision and values of the organization could determine what is material. Like, according to me, this is what is a material nature related issue for me, right? And it can also be, say, an informational demand from the shareholders. As shareholders could increasingly ask questions on a particular area of nature's impact being done by the organization's operations, which could result in such an area being categorized as to be material in nature, right? So this is the concept. That is why I wanted to focus a little on the word material, right? um, while board members will typically want to see a quantification of key nature related risk and opportunities in financial terms, right? Because what is most relatable is what is quantitative and not necessarily what is qualitative or subjective, right? Methodologies for this are still under development. Like, how can you quantify a perceived risk, right? And if my perception is attributed in a particular manner in my disclosure, and my competitor has got a more loose definition, and because of which his performance is perceived to be more nature friendly, then where is the parity? So that is why there is work which is happening in ISSB, etc., to give those standards which will help in quantifying such nature related issues or risks. So these are some pertinent questions which board members should ask. The sixth one is, how are we engaging with our value chain? Now, value chain, as we know, can be upstream or downstream. That is, our vendors or our customers, and indigenous people, local communities, the other stakeholders, to understand their views with respect to nature related issues. So, if you see, and I alluded to that in my first discussion, that SEBI also asks who your stakeholders are, how are you engaging, how did you identify who your stakeholder is, and so on and so forth. So, this question is to be seen from that perspective, right? That how are we engaging with our value chain partners? How are we engaging with our local communities, the indigenous people, right? Because we're talking about nature, so then it could be in such ecological sensitive areas where indigenous people are staying, right? Or say the local communities could detrimentally get impacted, right? So how are we engaging with them? Because nature-based issues are location specific. The back office, which is there, say in Mumbai, need not be as concerned about by indigenous people than what is happening in their background. The local communities around the back office in Mumbai may not be as impacted as the local communities, say, staying in the coastline of a company which is conducting some detrimental, ecologically degrading activities on the marine front. So that the local communities there in the coastal areas will be more worried about our company's operations than the local communities around our office in a city like Mumbai. So which is why it is location specific, and hence engaging with those stakeholders is important. So it cannot be a tick in the box that I gave a questionnaire to my people who are there near office. Many of them could be our suppliers about whom you know uh, uh, we are the major customers for those suppliers. So they dare not give an answer which is not what we want, for the risk of their business going away and we looking at his competitor than him, right? So which is why asking the right questions at specific geographies and all the stakeholders is extremely important. Only then we will get all of, when we say nature dependencies, risk, opportunity, etc., is what will come to light. So when the director asks this question, when the management gives that answer, when the directors will have to double click on that and see that is it just being done for the sake of doing, or is it being done in the manner in which the board expects the company or the management to do or act on, right? So management's response will be basically who the stakeholders identified are. Does it have a policy? Many of the companies have a stakeholder relationship policy which clearly lists down what are the what do you call um, constituents of the stakeholders identified by the company. It could be, employees, customers, value chain partners, the government, regulators, local communities, nature at large. Say some companies even have identified future generations to be, their stakeholders, right? So this is as regards materiality and stakeholder engagement is concerned. Then how does the management, this is the next question, question 7, how does the management integrate nature into short and long term decision making, right? See, decision making is very very critical, which is why in one of those questions I mentioned that not only should we give the very first question, not only should we give the in detail the presence of the company at present in ecologically sensitive areas as an answer to the first question which a board could ask, but I had also mentioned that it should make a mention about the potential areas wherein the company is planning to foray or planning to set up operations. So then what happens is short term and long term decision making. The board could give an approval to such a place provided X, Y, Z steps are undertaken. Or it could say that, now you focus on the other areas, you do XYZ and then come back to the board with the proposal, and at that time point in time we will evaluate, right? So from a nature perspective, as a board member, what are the decision making questions which are coming to me, okay, be it from a short term or a long term perspective? This is one area which the board of directors need to think about and which they would need to ask before the management. The next question is basically how do we expect our understanding of nature related issues to change over time in our sector and in the markets and location in which we operate. See, as consequences of climatic changes and nature related losses escalate, right? The financial implications for companies and financial institutions become more and more evident and significant. Like, say, if there is a class action suit on a company for, say, a particular negligence that it has done, that is good enough for the company to see whether it has the wherewithal to continue as a going concern or no. Okay. So there was this thing when in one of the leading banks in one branch in a particular state, there was a fraud which happened to the tune of some, 600 or 800 crores. When we saw the PAT of the bank itself was some about 400 or 500 crores. Then the question came as to how is it going to repay? Does it have the resources? And so on and so forth. So the the financial impact of nature related degradation or challenges is just evolving. Like there have been cases wherein, say, the Exxon company for the oil spillage in the US, etc., have been levied hefty fine, but then them being Exxon, etc., they were able to pay the 2 billion US dollar fine to regards the damage to the fishery ecology that it had done, the oil spill. But not everybody will be able to withstand that, right? So that is just evolving, and it is ever changing. Again, the regulatory requirements or the consumer expectation, we're talking about different stakeholders here, or the investor risk management requirements, the kind of questions that investors are asking, the kind of regulations that regulators are bringing forth, all of it is again changing. Like there is a draft paper which has been published by the Reserve Bank of India in February 2024, which is yet to see the light of the day, because it is really, it has really shaken up the lending industry, wherein Reserve Bank of India is saying that you have to factor in climatic risks, etc. You have to ask these kind of questions, climate risk assessment, basically CRA as we call it, in your decision for lending. Now, everybody is not trained as yet, or do not have the kind of skills as yet to do it. So, which is why probably it has, and then there has been a lot of feedback which has been given by the industry as individual components, but also through industry association bodies like the Indian Banks Association and so on and so forth. So, which is why it has not seen the light of the day. But then, as they say, the sparrow is out of the bag, right? So everybody knows at some point in time or the other, it is definitely going to see the light of the day. So these are the kind of questions that the board would need to ask. The board asking these questions will force the companies to think on these lines if it has not been thinking on these lines as yet, right? The next question is, are we, as a director, we are asking the management, are we up to date with shifting regulatory developments, both voluntary and mandatory, industry standards, and investor expectations across jurisdictions in which we operate? So, this is an extrapolation of the previous question. The previous question was centric to the company, right? Where, you know, it largely is going to give an answer from a policy perspective. Now, this question is being asked from across geography perspective, right? If the company has got operations across different countries, then for each country there should be an analysis which is put up before the board of directors, which is when it will be a comprehensive answer. Like in such and such country, this is unacceptable. So we are exposing ourselves to a particular financial risk, because the regulator in a different country, though there is a law, the regulator is not as stringent, right? So, and then there is a blatant violation. This is a market practice, so we can get ahead with it. So that is a calculated risk that the management is taking or presenting before the board, and the board can decide either ways. So this is another pertinent question which the board of directors should ask. The 10th question is, does the board and senior management team have the requisite skills and experience to adequately manage the organization's nature related issues, which is when all the HRD, human resource development aspect comes in, like how, say, in financial services, for selling a particular product, the feet on street need to have undergone a particular certification, say from Indian Institute of Banking of Finance, which is IIBF, or say AMFI, Association of Mutual Funds of India. So, likewise, what is the sensibility that the company is imparting on all its employees as far as nature related issues are concerned, right? So that is another pertinent question. What is the upskilling which is happening of employees? What is the exposure which is being given to employees to think on these lines, right? And for them to think on these lines, they need to have the adequate skill sets. For them to have the adequate skill sets, you as a company need to give them the opportunity of providing various skill enhancement trainings. The next question, question number 11 is: are the organization's skills and capabilities on nature related issues, including assessment and learning, being institutionalized for the long term? So sometimes what happens is the company will say, "Oh, the board is asking, let us do a tick in the box exercise, and immediately go about with a particular activity, and that is about it." But is it being institutionalized? Today, a particular person is heading the HRD department. Today, a particular chief executive officer is there who has started this. But is it a one-time exercise or is it being institutionalized? These kind of hard questions. So we as directors should not just be happy with a yes or a no answer. They should be drilling further to find out whether if it is a yes, it is a yes with the kind of vision that it will continue to be maintained all through, or is it a knee-jerk reaction basis which a particular training was sponsored for the employees, or a particular expert was brought in to train in the company, and it is reported to the board and in the annual report that yes, we have trained our employees. So is it a one time or is it institutionalized? The last question is: are we confident that we are fulfilling our legal duties in relation to nature across jurisdictions in which we operate? What evidence do we have that we are doing so? So, we all know that companies periodically submit a compliance certificate, compliance with all applicable laws. And that is the be it and end all. No questions are asked. A director will ask, Acha, is there any non-compliance? Then the compliance officer or CEO will say, no, there has not been any non-compliance. Then the chairman will say, okay, next agenda item. Now what is being requested for is that you ask for evidence. You ask in writing from them as to whether nature related laws, whatever is there, all of it is being adhered to by the company or no. Because as I said, the sword is hanging on the director's neck. So if they say yes to be an answer, then what is the evidence basis which you are saying yes is what is to be asked. Now we come to the conclusion quickly. I said across geographies, three different continents, one instance has been picked up. The first one is from the United Kingdom. So, an England and Wales legal opinion published in March 2024 confirmed that directors who fail to give consideration to relevant non trivial nature related risks and take appropriate steps to mitigate them may be exposed to claims that they have acted in breach of duty. So, as I said, I alluded to Section 144 of the Companies Act, wherein there is this duties of directors which is prescribed. So now, what is the next instance in Japan? It came only just 1.5 months ago. In 2025, which is 1.5 months ago, is basically the TNFD concept paper or guideline. This is March 2025. A Japan legal report published in March 25 noted that global developments such as TNFD and ISSB's announcement to commence work on disclosure requirements relating to risk and opportunities associated with biodiversity, ecosystems, and ecosystem services are relevant to directors' duties. Clear. It confirmed that management of nature related risks are highly intertwined with climate related risks, and that nature risks may constitute material financial risks that directors have a duty to oversee. So basically, TCFD and TNFD's overlap was acknowledged in Japan through this legal report in March 25. Finally, we come to Australia. This is slightly older, October 23. An Australian legal opinion published in October 2023 confirmed that nature related risks are within the scope of directors' duties to act with care and diligence under Australian corporations law. Further, given the large amount of information already available about economic dependency on nature and the rate at which it is being degraded in Australia and globally, nature related risks would likely be regarded by the court as foreseeable now. Directors of Australian companies need to identify their company's dependencies and impact on nature and consider potential risks these pose to the company. Now, this is very important. Failure on the part of a director to identify, manage, and disclose material nature related risks may lead to increased shareholder pressure and even litigation against personal assets of directors. Australia has gone to the other end of the spectrum. So it's dot 4 o'clock. We started dot at 2. We come to the end of the presentation. I just hope that it has kindled some interest in you because this is an absolutely new area, and this is what will determine us as professionals, to be possessing an edge over our peers. So now I'll go back to Shaili and see if there are any questions which have come, and we'll see how to answer that.
Right. Thank you so much, sir, for your insightful session. There are many questions, but considering the constraint of time, I will take up two or three of them. So the first question is there any industry-wise guidance note or responsibility statement for checking the TNFD disclosure of four pillars?
So there is no industry-wide note. What happens is people who see, like say for example, we know that ESG rating agencies issue say solicited and unsolicited reports, right? So when they see the disclosures, a particular quality, if it emerges, it will have a better score. If it is only English and things are going in circles, then the score will not be as good. And the investors, they largely, because say the unsolicited ESG rating which is given to a company is available on public domain, so investors can always look at it and then see as to what is the assessment of a company by an ESG rating agency. So, answering the question, there is no particular questionnaire which says if this is answered, then you get 1 point. If this is answered, you get 2 points. There's nothing like that. It is basically how good and rich and transparent are your disclosures under TNFD such that it is perceived positively by the person who is reading the report, which could be an ESG rating agency or an investor. Over to you, Shaili.
Okay. What indicators can demonstrate that the board is effectively overseeing nature-related matters?
Excellent. So, what are the indicators? Firstly, the board minutes, when it clearly notes that these are the questions which the board members are asking the management, that itself is the first victory. Because we know that the most reliable source of board proceedings, or rather the only source of board proceedings, is the board minutes. If in the board minutes it is clearly recorded by the company secretary that these questions were answered, and these questions were asked, this is how it was answered, and after the question board asked these additional questions, and they have given the task to the management to come back with an update on these things in the next meeting, that is good enough. And then in the next meeting's ATR or action taken report, the answer to the board's directives is presented at the next meeting. So then it shows a continuous engagement of the board with the management on nature related issues, which is there in the most reliable document on board proceedings, which is the minutes. Over to you, Shaili.
So the next question is, how frequently should the board discuss nature-related risk and dependencies?
Oh, this is a very good question. How frequently? Like, see how courts react, right? Courts function either when there is a matter which is presented before it as a case which is filed, or on a suo moto basis, like on its own. So the question is, firstly, are nature related issues being brought at present through board agenda notes to the directors by a company? If the answer is yes, then the board of directors need to see what is the frequency. Is it coming only annually along with the sustainability report or the board's report, or is it coming semi annually? Is what they have to see. If they are satisfied with whatever be the frequency, then it continues as is. If the annually there's a meeting of independent directors, independent of management, without the presence of management, which is where they can talk freely about all of these practices. And if collectively it emerges that no, it cannot be only an annual discussion, at least it has to be a semi-annual discussion, there the frequency changes. If it has not been happening at all, and now the directors wake up on seeing TNFD and the chatter around it in the investor community and the regulator community, then it can start afresh. And when it starts afresh, upfront it can set the periodicity. The next, which I was trying to say, is on its own. Suppose, say, in the April meeting only, along with the annual report or the sustainability report's approval, these matters were brought in. But then there was a serious development which happened in the month of May. Then, on its own, the board can choose to direct the management to present a status update at the immediate next meeting. So it can be either suo moto or it can be at a set frequency. Even if it is a set frequency, upon evaluation, if the frequency needs to get better, the directors can advise the management to bring it more frequently for discussion. Shelly.
So the next and the last question is, how can the board integrate nature-related discussions into existing ESG or risk governance structures instead of creating parallel systems?
Absolutely. That's a very good question. See, in my fourth or the fifth slide, you would have seen all the global reporting frameworks, right? So most of the reputed companies, report on these global parameters, say GRI, TCFD, integrated reporting, UNSDG related mapping of its activities, TCFD, and now TNFD. So all of it, there is an overlap. Okay, when I say all of it, for example, say manufactured capital, environment capital, in the one of the six capitals of the integrated reporting, it will have a footprint in the four pillars of TNFD. Right. So what typically is done is the entire sustainability report is written in a holistic manner, and at the end of the report, a glossary is given wherein it says that these paragraphs cater to this pillar of TNFD, this goal number 16 of the UN SDG, GRI Standard 92 of the Global Reporting Initiative. So they are not parallel activities which need to be pursued. It needs to be pursued in a holistic manner, but so that the stakeholders concerned who are interested in evaluating your company's performance from the lens of sustainability, you give a glossary and say all of this is what we have reported holistically, but this is the breakup of each standard how we have given in a particular paragraph. So that mapping, that glossary can be given at the end. This is as far as reporting is concerned, but the same philosophy is to be adapted or adopted in the running operations. There cannot be, as the various examples which I kept mentioning during my talk, they are not separate functions. You cannot have a separate team which is going to look at post facto on how the company's operations are functioning detrimentally or enhancing the nature or exposing the company to nature related risks. It cannot be working separately. It has to only be in tandem. Shelly.
Thank you so much, sir, for answering the questions in great detail and with precision. Our Q&A session comes to an end. It is my proud privilege to propose the vote of thanks for today's insightful session on the Task Force on Nature-Related Disclosures, Nature-Related Financial Disclosures Guide on Asking Better Questions on Nature. We extend our sincere gratitude to our esteemed speaker, Mr. R. Aditya Subramaniam, for sharing his valuable insights and expertise on the evolving landscape of nature-related financial disclosures and the importance of integrating nature considerations into business and decision-making framework. I also express my heartfelt thanks to dignitaries, participants, and all stakeholders for their active participation and support in making this program meaningful and successful. A special word of appreciation to the Sustainability Report Standard Board of ICAI and the organizing team for their dedicated efforts in organizing this enriching session. Thank you, everyone, and have a great day.
Thank you, Shelly. And I also extend my heartfelt gratitude to all the participants who have logged in, the Institute of Chartered Accountants of India and the Sustainability Standard Board. Thank you for the opportunity. It felt nice coming back to ICAI. Thank you so much.
Thank you. Thank you once again.
Tech support. Go offline.